Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and on this special edition, we're going to be focusing on the Q3 earnings of Anand Rathi Wealth. The company has reported a consolidated net profit for the December quarter at 58 crore rupees, registering a growth of 34%. The revenues from operations have also come in at 187.3 odd crore rupees, again rising about 34 odd percent from the previous year's same quarter as well. Now, the company has also mentioned that its client base has increased to 9,641 families, and the assets under management have also increased to 55,057 crore rupees as of December 2023. Now, the details for us, what has really worked in favor for the company in this quarter and the outlook going forward. I am now joined by the top management of the company. Mr. Anand Rathi, the chairman of the Anand Rathi Group, is with us, sir. Welcome, good afternoon to you, and great to have you with us on Business Today Television. Another steady quarter with a strong growth reporting on a lot of fronts this time around as well. Tell us, has this quarter come in as per your expected lines, or is it better than your estimates?
Good afternoon, Sakshi, and all the best of New Year to all your viewers and you too. I think as you have seen, we have been normally progressing very well as per plan. And of course, better than plan, I would say, because last 6 months earlier also we revised our guidance, increased it by 10-15%. Yes. And I'm glad to say that even in first 9 months now, we have achieved 77% of the revenue and profitability in 9 months. So I think we are definitely little ahead of our target, and that's a good news.
Absolutely, it's good news, sir. Would that also mean that you would be upping your guidance even further? As far as I remember, for the net profit for the year, you had a 205 crore rupees of a target. Looks like you would be achieving that. Do you think is there a need for you upping that guidance at this point?
Sakshi, you're right that we gave 205 crores in the beginning of the year. And last quarter, when we found that, yes, we are able to do better, we had revised it to 220 crores. Yeah. So now 77% achievement I said is on 220. So I think we are very confident that we'll be able to achieve even the revised guidance which is given, both in respect of profitability and revenue. And so I think performance-wise, every quarter on quarter, we are trying to see that there brings improvement, but there is very consistency. I think what you'll find, very, very important and present in our results is that we normally try and see that we are as per target and little above targets.
Absolutely. Sir, help us understand a little bit on the client addition this quarter. How was this time around, and also going forward as well? What is the kind of aim? I think initially you were talking about 10,000 as net addition for the fiscal year. You're already at 9,600 plus. So what is that on course already? That seems so. What is the outlook, sir?
You see, our outlook that we wanted by the March 24 to reach 10,000 families. We already reached 9,641 to be precise. And again, I think the expectation here also, we are able to enroll more clients than what we had expected. And I think all this shows that, our clients are happy with us. We hardly have any turnover of our clients. We don't lose them. And that has been the basic philosophy, has been very client-centric. And therefore, we can really claim that we work for the clients, for their benefit. And therefore, that philosophy of providing an excellent value proposition to the clients is working very well. As you can see, this is perhaps our 9th result after we went public. And consistently, we have seen growth on all accounts, be it client addition, be it AUM, be it revenue, profitability, everything. I think we are able to really grow very well.
Right. So, since the family offices, the number of clients, they're definitely going up. I wanted to understand in terms of wallet share. Is the average wallet share also improving? Your overall AUM has crossed 55,000 odd crore rupees. So, there's definitely more inflows that you're looking at. But in terms of average wallet share per family office, how has that moved up this quarter?
Yeah, that is also going up. We have increased by about 10%, average wallet share also. Because you know what has been average when new clients come, it starts with a small amount, may
Okay.
not be full. But as the aging of the client grows with us, we are able to get larger and larger wallet share. And many clients now who have been with us for more than 5 years, we have almost 75% to 100% wallet share of theirs. So that is our philosophy. Let's, clients should try us, understand our philosophy, and if they're happy, then I think it's a natural process that they will keep on allocating more to us.
Absolutely. Sir, when we talk about penetration, I remember last time around I was talking to you and you were saying that there is enough and more participation also coming in from tier 2 and tier 3 cities as well. So, in terms of penetration to these geographies, how is the outlook going forward, and are we looking at further jump in this space?
Yes, I am actually again very optimistic on because now even the tier 2, tier 3 cities, you have very, very wealthy people, you know. As the economy is growing, the advantage of economic growth is percolating down everywhere. And a lot of small businesses, SMEs are doing very well. You can see how your small cap index is doing, how mid cap index is doing. And most of these are, at tier 2, tier 3 places. And we are finding excellent response. We are already, we keep on opening new offices. We opened Chandigarh, we opened Nagpur, we are looking at Udaipur, a number of places. But one good thing is also that, our growth is not restricted by physical presence. Our philosophy is that our wealth managers can go and reach client anywhere. So there is no territorial restrictions for them. And therefore, but yes, to answering your question more precisely, there is excellent, I think, now, inflow of more and more clients coming from smaller cities. And particularly for them, it's very happy situation because they were not able to get the type of expert advice which
Yeah.
they are able to get from us. In smaller towns, it was not available. So that even makes them happier.
Right. Also wanted to get a little granular detail into in terms of the flows that you have got this quarter, sir. How much of that was via MLDs? How much of that was via equity, and how much of that was via debt? And the outlook going forward. We are already looking at stock markets at record high levels. How do you see the flows shift even in the quarters to come?
देखिए, our major emphasis first is on the mutual fund, equity mutual funds, and then on the MLDs. Equity mutual fund we have added this year more than 1,500 crores. Okay, in this quarter.
Okay.
For the year as a whole, we have added about 3,800 crores. And there's very little inflow in debt. Actually, we have reduced the overall debt. Our overall debt percentage of the total AUM has come down by almost 1.5 to 2% over a year time. Because
Okay.
we believe that in this long-term investors start realizing for them the best combination is equity mutual funds and the MLDs, because MLDs provide that a better return than debt, in spite of being of that nature primarily.
Right, fair enough. Tell us also, sir, what is your outlook on the margins that you expect? Where are they at, and how do we see them panning out? We are already done with Q3. We're looking at Q4 as well. In the second half, we've also seen historically this second half pan out much better for you also.
I think that's where our philosophy is slightly different. We don't really want to depend on the last quarter to complete our targets. And
Okay.
what we really do is, when we decide our target for the year, we would like to do it front-ended. Okay. We would like to achieve the numbers front-ended. And therefore, you'll find that our first quarter is sometimes better than other quarters. Okay, because we believe that if you start well in the beginning of the year, then it creates a different type of environment in the organization, and therefore we are consistent. If you see our performance for last almost 7 8 quarters, we are growing between 30 to 35% every quarter. Okay,
Yes,
but there is
yes,
a lot of consistency. You see, most companies will do 40% in first half and 60% in the second half.
yes.
In our case, it's not so. I think our target is that at least 25% we must achieve every quarter, and little more than that, so that we don't depend on the last quarter to complete our numbers.
Fair enough, sir. Consistency is key, and a point very well taken on that front. Two more questions that I have for you, sir. One
Sure.
is on the tax division that you wanted to create in the company. How is that moving forward? And going forward into the long term, how big a division is that going to be in terms of revenue contribution for you, sir?
You're talking of tax division?
The tax division, sir, you had talked about earlier that you're going
Okay,
to be creating a tax vertical as well to help the HNIs to have more tax advice from you.
correct. Where we, yes, we have a tax team, tax division, whatever you may call it. But this is, I will be really be surprised to know that we don't charge for these services. These
Okay.
are add-ons to our services, because we believe you have to do the complete integrated wealth management. You have to look every aspect. So all the other services like tax, like will, trust, all other things we provide to people without any cost, because we believe that if we are really wealth manager of any individual, we are treating their CFO, and we must render all the advice
Yeah.
without any additional cost burden to our client, because our ultimate idea is that after all cost and whether you can make better returns. Okay.
Okay, fair enough, sir. Just like one last question, and that's with respect to the upcoming budget. First, voter account, and then the main budget as well. Budget 2023 had ended the tax advantage for MLDs as well. Going forward, what is your own expectation from the industry that you belong to? What kind of perhaps recommendations have gone in from your own respective industry for the budget upcoming? Of course, this is going to be an interim budget, but still, what is the kind of sense that we can get from you? What is your expectation from budget 2024, sir?
As you rightly said that this is going to be interim budget, I think there were unlikely to be many changes on the tax or other fronts. So I think obviously market always expects that long-term guns may go away. There is a double taxation in long-term gains, but I think over the period we have seen that's very difficult. I think government is always looking for generating more and more tax revenue. So as you also said, MLD, actually that MLD provision which came last year, it really didn't affect us. This was primarily for, listed MLDs, and also where actually they were called MLDs, but they were more of a vanilla products giving similar return. There was no variability in those products. Variability was on paper only, whereas our products are truly variable depending on the market. So I think I don't have much expectation on the tax fronts, but this budget would be very good again on the infra investments. I think what the government has started doing, and thanks to the robust tax collection, GST, income tax, corporate tax, on all fronts, I think we have been collecting more than what the budgeted provisions have been. Okay, the only area where we have not been able to achieve is the disinvestments, which government wanted to do. Now the markets are good, and the government shares, all the PSU shares, have really zoomed, in last 6 months, 1 year. So maybe government may look for larger amount of disinvestments, which has been the stated policy of the government, that they would like to disinvest or even privatize. Okay. So I think on the whole, the sentiment is very good at this moment in terms of economic growth, in terms of, there is a lot of buoyancy in everything. Talk to
Yeah.
anybody. And I think you'll feel. I think all the interviews you are taking, you will see the change. What was 2 years back or 1 year back and today. Uh, all the interviews will bring the optimism, which I also truly believe. I believe that the great cycle, economic cycle is started for India with the high investments on infrastructure. So,
Okay.
2 days back, this 21 kilometer bridge was inaugurated.
Yes,
It's,
yes, yes.
it's a marvel for India, to do this. And
Absolutely.
uh, so I'm
Absolutely.
very, very, very optimistic, Sakshi, very bullish on the economy. So hopefully budget should come good. It should not give any surprises for the business growth.
Yes, absolutely. No surprises and no bad news is actually good news. But I wanted to understand from you, sir, on markets. You're joining us on a day when there's another historic level that both the Sensex and the Nifty have achieved. 73,000 on the Sensex and 22,000 on the Nifty as well. You have seen remarkable milestones all across your journey of equity markets as well. Where do you see the stock markets are poised or headed going forward from here for all of those fresh investors who may be just still anticipating to enter the stock markets from a very long term perspective? They may be having this fear that perhaps we are entering too late and we are entering at a high point. What would you like to tell them, sir?
No, my view is that, uh, timing of the market is really impossible for anyone. And obviously, when markets go up, there is amount of fear in the market, in the minds of people, whether we should continue to hold, we should disinvest, or we should enter new or not. I think my advice to people is that depending on your capacity to invest, SIP is there for small investors. So people should not look at the market at all. If they have SIP, invest whatever investment you can do in equities on a consistent basis. Markets will go up and down every year. If you see the every year's high and low, you might find 10% or more difference between high and low. If
Yeah.
you see right now 52-week high and low, you might find even 20%, almost close to 20% difference. So one should not, if somebody wants to see that I want to enter at the lowest market, that's not possible. Many times people exit when markets go up, thinking that they will enter again to go back. They are not able to do, because then markets behave very, very, differently at different times. So I think then when, even if they want to re-enter back, they think, oh, if market goes down a little further, then I will enter. So psychologically, my advice to people is stay invested, go for long term. Don't look at day-to-day variations to, unless until you are a trader, you are a speculator, or you are a gambler. Okay, then you can do whatever daily markets. But if for a true investor who is looking for reasonable return of 12 to 15%, I think one should continue to invest irrespective of the market. And don't worry. Markets may go down after investing, but don't have to worry. If you have 5 years plus view, Sakshi, my experience is that any 5 year period you think, market has given positive.
Okay, well, that's a most wonderful advice that we could have given, sir, to all our viewers at this point in time. And always a pleasure having you with us on Business Today Television. Here's wishing you all the very best to you, to your team, and your family members for the new year. And we shall catch up very, very soon again with you for the next set of numbers that you'll be posting. Many thanks for joining us, sir.
Thank you very much, Sakshi. Thank you.
Thank you. All right, we will wrap up this special conversation right here. Anand Rathi Wealth reporting steady set of numbers, being very, very positive about consistent numbers going forward from here as well. And of course, they've upped their guidance for the net profit for the fiscal year 2024 to 220 odd crore rupees, which they're hopeful of achieving as well. So strong quarterly earnings and may continue on that momentum as well going forward from here. Stay tuned on Business Today Television as the more action comes on your screens right after this too.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello and welcome to Market Today. I'm Siddharth Zarabi, and with me to discuss the third quarter performance is N. Ganapathy Subramaniam, the Chief Operating Officer and Executive Director at Tata Consultancy Services. Thank you very much